Happy January 2025, or should I say happy February? What a start to the year it has been. The gold and silver action has kind of ramped back up. I hope this finds you well and your year off to a great start, like the metals are off to a great start. All four metals, in fact. Gold is seeing a nice resumption of the bull market. It finished up 6.5% in January. Silver finished up 8.6%. And platinum finished up 8.1%. Palladium led the charge up 10.6%. So a really fun January. And without further ado, I definitely want to share some images with you so that I can get some charts to go along with some of the words that I'm describing to you here. So this is the gold chart just for the last few months. So I wanted to show you that previous all-time high right where we hit 2,800. So we did close out the month of January over 2,800. First time we've ever really crossed that threshold. We closed out at 2,803 on Friday, January 31st. Since then, as I record, we've obviously continued to climb as well and off to the races, and we'll talk about where we're going to go here in just a little bit. Back when we were talking about predictions, I want to show you here where we thought that it was going to go, and on a pullback, we did end up seeing right around the 2560. So that equated to what's called the 618 Fibonacci. This doesn't play out all the way to the end of the year, but right there showed the bottom. And quite honestly, we were kind of thinking that we were going to meet this trend line and come down to around 2,400. It just didn't happen. There's just too many fundamentals in the market that are driving the gold price. So we reversed, ended up climbing back up from there. Now, where do we see things? We brought this out last week as an option of a breakout. And you see here that 2,800 was the ceiling, and we did cross through that. So now we've got this whole range, a lot of pundits, a lot of analysts, a lot of experts, both people in-house here and out of this house are calling for $3,000 gold as kind of a foregone conclusion. So we'll see what February and March bring. Typically a strong time of year anyway, but you're in these uncharted waters, and you really could run to about 3,500 depending again on if underlying fundamentals change, which we'll get into. I want to show you this, because this is 2016 when Trump got elected the first time in November. You saw gold drop into the end of the year. It dropped 13%. This go round, it only dropped about 9% from the peak to the trough, really only about 6% from election day down to the trough. And then you'll see in the 6 months, it resumed its bullish trend. And that's similar to what we're seeing here. Look at this reversal early in the year when the policies came out, because we have to remind ourselves that he's a very stimulative president. He wants a weak dollar. He really wants to keep rates low. And, those are all things that can be actually inflationary on top of that. But growth and inflation are good for gold and silver. So we'll see if this trend is something that mirrors, and we'll get the same kind of a look with silver. Here's the silver chart. So we finally have a breakout. This thick black line is the futures market, because it set a little higher high back in December. And this trend line, as we connect those highs, shows you that this is kind of a ceiling that we've broken out into. So we closed the month at $31.43 for January, which was a breakout above that line, just barely. Now we've kind of resumed the climb there as well. And remember, we did see, 33, but also back earlier in the year, we just came up shy of the $35 mark. So that's where I kind of feel like we're going to run here in the near term. This trend line shows the NYMEX, which is what we mostly focus on, not the futures market. And there you'll see that we kind of had a breakout a little bit sooner on that trend line and a much larger breakout. So platinum, this is just a 1 month chart on platinum showing where we started. We opened the month at $913. We closed the month at $987, but we saw a high of around 1,042. So platinum, we're hoping has kind of come to life, even though it faded into the end of the year. Into the end of the month. Palladium chart looks very similar. Started at around $930 and got a high of around 1,070 to close at 1,029 actually. Before getting down or coming back up here just in the start of the February month. The dollar index, another good chart for us to see. So we had this big breakout. This is post-election again. The dollar index really had started to rally going into the election. The whole month of October, we saw the dollar index start to climb. And then we had this breakout here, and now we're in this corrective phase and have come down to just below the 107.3 or so. Now, as I record, we're at like 107.9. So staying below that 108, chopping sideways, but down off of that 110 mark. And that coincides with the gold rally as well. When the dollar index goes down, gold tends to go up and vice versa. Blurry chart here, but this shows the trend line that I was talking about. So you see that US dollar index really start to rally in October, predicting a Trump win. And then once he won, you saw an even stronger rally all the way to that 110 mark, just about. And now we've broken below that trend line. So it's kind of the opposite of the silver trend line that I just showed you. This is breaking down to the downside. If that continues and we fall down into this range, that's where we're going to see the $3,000 gold. So look at this overlay of this chart of gold over silver. So this is the dark brown line is 2024 and into the first of the year. Okay. And that is the dollar index rally. And you see the exact same thing happened back in 2016, which is the gray line. Okay. And almost mirror images. And then you'll see what happened to the dollar index as the Trump presidency resumed in 2017. And again, that's a stated objective of his. He wants to weaken the dollar. He wants, it helps exports, it helps manufacturing. It helps certainly send our inflation out of the country and get absorbed by other countries. And that's the beauty of the status of the world reserve currency. But I thought that was an interesting overlay to just show you. And the gold silver ratio now has seen a lot of volatility in 2024. You'll see these spikes, but this is the silver chart that has happened as a result of hitting the ratio. So here's the ratio down below. Once we hit 90-1, I sent this chart out earlier, you tend to see these subsequent rallies of between 26% and 48% back in 2024 after those 90-1 hits. And that just only takes a few months. Well, we just hit it again in January on December 31st, but then again, second week of January. So we're very optimistic that this 8% spike in silver is the beginning phases of another 25 to even 75% rally in silver as a result of hitting that 90-1 ratio. If it is, then hopefully we get an opportunity to ratio trade for anybody that got in at that high ratio. Few fundamentals to cover with you. There's a concern on the liquidity of the LBMA, and with the Bank of England struggling to meet demands on getting physical gold sent over to New York to the COMEX, you're seeing some concerns about liquidity. You're seeing some arbitrage. You see some premiums in that market. Now, keep in mind the ETF market still has net outflows in the United States. There's more gold leaving ETFs than investing in gold ETFs right now. So even our physical market is soft. The premiums are not high, but you're starting to see these opportunities here arise globally where there's going to be a shift and a redesign in a lot of theories of some monetary policy and monetary systems. Another concern that's driving gold higher from a fundamental standpoint, certainly the trade war. There's been shots across the bow in the last week with Canada and Mexico and China. And the concern is going to drive up expenses, certainly in the short term and maybe even the intermediate to long term. It can drive inflation higher, much like a weaker dollar does. So there's a lot of fundamentals driving, are pointing towards inflation remaining sticky and even increasing. And there's got to be pain before there's solution. So I would prepare everybody for that, not only on the inflation front, but gold is telling a story, and the story is that there's recession concerns as well. Here's a good chart on silver remaining in a deficit. So you'll see here starting in 2021, we had all of these shortages in the physical demand versus the actual mined supply. So 215 million ounces short in 2024 is a continuation of that trend. And so we'll see what happens, because the longer you go with these silver shortages, the higher the ounce price climbs and the physical market gets pinched and premiums start to climb on top of the ounce climb. So that's it in terms of sharing any images with you. Again, really, really appreciate you as clients. We encourage a call to 866-211-8972. and we'd be happy to run through your individual portfolio and show you where your entry exit points are, ratios, premiums, all the fun stuff. All right, here's to a great February.